Alright, so let's move on to some trading strategies. Now what I've done is I'm focused on one specific strategy. And I'm going to explain this in some depth. This is a strategy I use. I implemented this around 10, 11 years ago, and I'm still using it today. It's a very, very powerful strategy. Now, this is 3 strategies for joining an intraday trend. Now, this is a day trading strategy, and it's very much designed for jumping on board a really strong move. It doesn't happen every day. We don't get these strong moves every day, but when they do, we want to get on board it for a continuation of the move. So let's look at the 4 criteria we have for this strategy. Number 1, we want a good drive in one direction on good volume. So we've got a strong move up, volume is high, and it's moved a good, decent direction, good number of ticks, preferably taking out some key levels, or with a key level acting as a magnet. What do I mean by that? So let's say we had our resistance level here. We talked about the resistance level. We break through that. We keep going, and it's very, very strong. It's a good drive. It's taken out a key level, or we have a really significant level up here that it hasn't quite tagged, and that's acting like a magnet, sucking the price towards it. Let's say that's a magic level of 100 or something, or let's say it's the prior day's high, or whatever it may be, but something that's pulling that price towards it. So a nice solid drive, taking out some key levels. Those are the first 2 criteria. Number 3, what happens is the market now starts to pull back for a few minutes, moving in a counter trend direction. So we get this little tiny move against the trend, and these candles should be relatively small compared to the size of the up candles. So look how strong these candles are. Boop, boop, boop. 3 solid ones, really good moves. And then we get a little tiny retracement. Those 3 candles are about the size of the last candle. So they're very small. Volume is drying up, and that is showing us one thing. It's showing us the volume is coming in on the drive, good strong volume. Volume isn't that interested, or traders aren't that interested on this pullback, so not many sellers are coming in. So if we look at the supply demand like seesaw that we had before, we can say that okay, bang, there's a massive demand coming in, supply is very, very small, nothing much happening. Then we sort of equalize a little bit. The demand backs off, supply stays the same, but it's slightly in the balance of supply, so we get a little bit of a drift lower. And then what we're looking for is to find a place to get back on it for a further move. Okay, that's the trade. It's buying on this pullback, looking for a further move to highs. So there's our criteria. 1, a good drive in one direction on good volume. And this can be up or down, by the way. I'm just using an example of up. Preferably taking out some key levels, ripping through those good levels, or as a level above it, acting like a magnet. Number 3, the market starts to pull back for a few minutes. Number 2, day trading strategy in a counter trend direction, very, very subtly, very, very quietly, not a big move. And then finally, those candles on the pullback should be relatively small compared to the size of the drive candles. So really not that much interest in this pullback.